You've probably seen the headlines flashing across your screen lately talking about the FTSE. It sounds a bit like a friendly nickname for a pet, but it's actually short for the FTSE 100 index. Think of it as a big scoreboard for the UK's stock market. It tracks the share prices of the 100 largest companies listed on the London Stock Exchange, from massive banks and oil giants to supermarket chains and pharmaceutical firms. When you hear that the FTSE 100 is up, it means that, on average, the value of these top companies has increased. It's a quick way to get a pulse on how the UK's biggest businesses are doing and, by extension, the health of the wider economy. The reason it's been making so much news in July 2025 is that this scoreboard has been hitting some incredible numbers. This month, the FTSE 100 has smashed through its previous records, climbing past the 9,000-point mark for the very first time. To put that in perspective, as of July 23rd, it closed at a new all-time high of 9,061.49 points. This isn't just a small jump, it's a significant surge that has made investors sit up and take notice. So far this year, the index is up over 11%, which means it's been performing better than some of its major global counterparts like the American S&P 500 and even the French stock market. This isn't just a one-day wonder. The index has been on a steady climb, setting a few record closes in a row. It's a sign of real confidence among people who buy and sell shares. When investors feel good about the future, they're more willing to put their money into companies, which pushes share prices up. This recent performance shows that there's a lot of optimism swirling around the UK market right now. This positive feeling isn't just coming from nowhere, it's being fueled by several important factors, from good news coming out of the companies themselves to bigger economic shifts happening both at home and abroad. So, when you see those numbers ticking up on the news, it's more than just a figure. It represents the combined fortunes of some of the most influential companies in the country, including household names you interact with every day. The story of the FTSE 100's record-breaking run is really a story about strong company performance, positive international relationships, and a hopeful outlook for the UK economy. It paints a picture of a market that, for now, is looking remarkably robust and full of potential, which is why everyone from financial experts to everyday savers is paying close attention. So, what's the magic formula behind this impressive surge? It's not just one thing, but a mix of several powerful ingredients coming together at the right time. A major driver is the hope of lower interest rates. For a while now, the Bank of England has kept interest rates relatively high to fight inflation. But now, with inflation showing signs of cooling, many investors are betting that the bank will start cutting rates soon. In fact, as of late July, traders believe there's a nearly 90% chance of a rate cut next month. Lower rates make borrowing cheaper for companies and can encourage them to invest and expand, which is great news for their future profits and, in turn, their share prices. Another key factor is that many of the companies in the FTSE 100 are seen as defensive stocks. These are businesses that sell essential goods and services like utilities or groceries, which people continue to buy even when the economy is a bit wobbly. They also tend to pay out regular, reliable chunks of their profits to shareholders, known as dividends. In a world with a lot of economic uncertainty, global investors find these dependable, dividend-paying British companies very attractive. They offer a sense of stability, making the UK market a safe haven for money from all over the globe, which helps to push the whole index higher. Let's not forget the power of good old-fashioned international trade. Recently, there has been a wave of optimism thanks to new trade deals. A new agreement between the US and Japan has helped boost global confidence. And closer to home, the UK is on the verge of signing a major £6 billion free trade deal with India. This is big news for British businesses that export their goods and services. For example, when the India deal was announced, a company like BT Group saw its shares jump by around 10%. These deals open up huge new markets for UK firms, promising more sales and bigger profits down the line. Finally, the companies themselves are simply doing well. Many have been reporting better than expected profits, which is the most direct way to make shareholders happy. When a company announces strong earnings, it's a clear signal that its business is healthy and growing. This positive news creates a ripple effect, boosting not just that company's shares, but also building confidence across the entire market. This strong corporate performance, combined with hopes for cheaper borrowing and exciting new trade opportunities, has created the perfect storm to propel the FTSE 100 to these historic new heights. When the FTSE 100 rises, it's because the individual companies within it are, on the whole, doing well. But it's never a case of every single company soaring at the same time. Looking at some of the big names gives us a clearer picture of what's happening. Take the banks, for instance. NatWest Group recently delivered some fantastic news, reporting first-half profits of over £3.5 billion, which was much better than analysts had predicted. To celebrate, it announced it would be returning over £1.5 billion to its shareholders. This was a landmark moment, as it was their first report since the government sold its final stake, marking the end of the bailout era from the financial crisis. Similarly, Lloyds, another major high street bank, also had good news to share. On July 24th, it announced it was increasing its interim dividend for shareholders, thanks to its own rising profits. This kind of news from the banking sector is a powerful boost for the FTSE 100, as these financial giants make up a significant part of the index. It wasn't just the banks, though. Alpha Group, a financial services firm, saw its shares hit a record high, surging by an incredible 25.6% in a single day. This came after the US payments company Corpay announced it was buying Alpha Group in a massive $2.2 billion deal, showing strong international confidence in UK firms. Other sectors have been performing strongly too. The media company Informa, for example, saw its shares rise by nearly 5% after it told investors it expected its revenues to grow more than previously thought. This helped lift the entire media sector. Likewise, healthcare and automobile companies have also been among the top gainers, contributing to the overall positive mood of the market. These individual success stories are the building blocks of the FTSE 100's record-breaking run. Each piece of good news adds another layer of confidence and pushes the index a little bit higher. However, it's crucial to remember that not everyone is riding the wave. The stock market is a mixed bag, and for every winner, there can be a loser. For instance, while many companies were celebrating, the construction materials firm Breeden Group saw its shares fall by 7.5%. This happened after the company warned that its full-year results would likely be at the low end of what the market was hoping for. On one particular morning, while the energy company Centrica was the top riser, the retailer JD Sports was the biggest faller. This shows that even in a booming market, a company's success still depends on its own specific performance and circumstances. So the big question is, what does all this talk of record highs mean for you and your finances? For many people, the stock market can feel like something distant and complicated, but its movements can have a real impact on your money, often without you even realizing it. If you have a pension, particularly a workplace pension or a stocks and shares ISA, then there's a very good chance that a portion of your money is invested in the companies that make up the FTSE 100. When the index goes up, the value of these investments also rises, which means your pension pot or ISA savings grow. This record-breaking run is therefore fantastic news for millions of savers across the UK. It means that the money you've been putting away for your future is working harder for you. A 14.3% total return so far this year for a fund that tracks the FTSE 100 is a very healthy boost to anyone's retirement savings. It's a reminder of the power of long-term investing. While markets go up and down, staying invested allows your money to benefit from these strong periods of growth. It's a bit like planting a tree. You don't see much change day to day, but over time it can grow into something substantial. However, it's important not to get carried away. While it's great to celebrate the highs, we must remember that what goes up can also come down. The stock market is famously unpredictable, and this period of strong growth won't last forever. This is why financial experts always advise against making rash decisions based on short-term market movements. Trying to time the market by selling everything at the peak is incredibly difficult, and you risk missing out on further gains. The best approach for most people is to stick to their long-term plan, continue saving regularly, and trust that over time the general upward trend of the market will work in their favor. Ultimately, the FTSE 100's new record is a positive sign for the UK economy and a welcome bonus for anyone with investments. It shows that despite challenges, British businesses are proving to be resilient and attractive on the global stage. For the ordinary investor, it's a reassuring signal that your savings are growing, but it's also a prompt to stay the course. Don't panic, don't make sudden moves, and keep your focus on your long-term financial goals. This market high is a chapter in a much longer story, and the key is to keep reading. That's all for this week's video. Please like and subscribe. Thanks for watching.